What's up, tycoons? What's up, traders? Today, we're giving you an update on Kadena, okay? Ticker symbol KDA, up massive on the day. I told you guys that we were going to have a large move coming soon. And when I did that, we were actually at these points on the chart. And if you can see, we ended up hitting our breakout level to the downside. We hit our bullish or our bearish price target a couple times, came down, broke that level, and then we ultimately came down to the 261.8% level. So I'm going to teach you guys in this video how I was able to come up with these levels using the fib tool right over here. Okay. And we'll go ahead and break down, what the scenario was going to be, how it played out, and how, after this massive rally today, you see we're up about 6%. We're holding some really key levels that could possibly take us back up to 1.2. And if we are able to break out from there, then we've got some major levels to the upside as well that we need to pay attention to. Okay. So smash the like button, subscribe to the channel if you guys are new, and we'll go ahead and break it down and explain everything we're looking at. So pay attention to the yellow lines first. Okay. These are the three most important Fibonacci levels. These are the 61.8, the 50%, and the 38.2. The reason that these are the most important is that they're the three most common and most well-respected retracement levels. And when they're respected, you see a trend continuation, right? So in this case, we've been in a downtrend. Okay, that's no secret. And what we did was we took our swing high, connected it down here to our swing low, and we can see we came down to this level, and we retraced up here to our 50% retracement level, got a rejection, and ultimately headed to the downside. Okay. If we would have broke through these levels, right, then we could have had a reversal. So if you break through the levels, then you can say, okay, well, this isn't a trend continuation. This is a possible reversal, right? And otherwise, once you get rejected here, right, then you can say, okay, we're having the trend continuation. So, I gave the price targets to the upside in case we did try to have a reversal. We needed to break out above 1.755, and we had these price targets here to the upside. And then I did the same thing to the downside, right? And if we zoom in, we can see, how well it respected those levels. And again, in this time, we're using the fib tool. And instead of looking for retracement levels, right, we're looking for extension levels extended past 100. So we're connecting our swing low right here up to the swing high right here. And once we break through this level, okay, we get our three price targets right here, the 127.2, the 161.8, and the 261.8 right here. And you can see that we actually found some strong support there, and we've had a very nice rally there. Now, there was also a buy signal at this time, and I'm going to go over the signals that you guys can use. That was a 42% rally there in a very short time, in about 2 weeks. All right. So specifically what we're going to do is we're going to look at the relative strength index. Okay. So let's make this one a little bit bigger. And we're going to highlight these two circles on our candle chart, right? So we have a low here, we have a lower low here. This token is in a downtrend, okay? The price of this token is going lower. The relative strength of the token should be dropping as well. But as we look in our index right here, the RSI, we see that the relative strength is actually increasing. So it's showing us the relative strength of a token at its given price. And what we are is we are at a low and then a lower low. So we're at a lower price level, but the strength of this token has risen. That's bullish divergence. Once you have a nice little trend line there, you can use this trend line as a support trend line, okay, and use it to gauge, any further momentum off of the bullishness, right? Once you break through this level, then the bullish divergence is broken, and most likely this token is going in a downtrend as well, okay? So the second thing we want to look at, which kind of lines up with our relative strength index, is going to be our MACD. Okay, and so for the MACD right here, what you want to do is you want to look for a sell signal when the blue line crashes below this orange line and starts trading below there. Okay, and you can see that's right here. This is right around the FTX collapse, and we fell really hard and we came down to our bearish price targets. Okay, so first signal we have, okay, is that we're at our bearish price target right here. This is a strong area of support for a potential bounce, right? We've already, came down, made the retracement, and we hit our extension price targets all using the fib tool. So that's number two. Okay, so 1 and 2 is basically strong support and the fib levels. Okay, what we're doing is we're showing how once you combine some of these signals together, you can have much more confidence in your trade. Okay, so next thing we do is we see, all right, well, we're starting to find some support here. All right, this is also exactly where we get a MACD buy signal. So if we zoom in a little bit more on the candles, just so you guys can see, okay, we had our bullish divergence, as well as a MACD buy signal, as well as, hitting our fib extensions for the continuation of this downtrend, right? So, we're combining all of those strategies together. I like to call them weapons. Trading, investing in cryptos like going to battle, going to war. You need to bring the proper weapons and have as many weapons at your disposal. So that way, you can increase your odds of success, right? So we have the bullish divergence trend line right here. We got the bounce bullish divergence, okay, right through here. Then the next day we got the MACD buy signal. And as I said, we went up about 45% at a nice rally there. And we actually caught support and bounced very hard today. That suggests we could be making a 3-wave, correction wave, or this could turn into a 5-wave impulsive wave, right? So we'll go ahead and put on our ABC for the corrective wave, because if we look, right, this is a sharp move to the downside, and most likely you're going to have a correction to the upside and continue back down. But there's a possibility we could, do something else and break through. Okay. So what we're going to do is we're going to zoom this back in, and we have our A wave here. We have our B wave here, all right, and our C wave is going to be up around here, around these levels, okay? And so what we're looking at is, again, the retracement levels, right? So we're looking for trends on a smaller scale, right? So we have our swing low to our swing high. We're going to see if we come down, make a healthy retracement. If we do, and we hold these levels, most likely we're going to continue up higher, okay? So the 3 main levels of support that we're holding is 1.002, 0.961, and then 0.920, all right? We actually bounced perfectly right here at our 50% retracement level, which is a good sign for a B wave, okay? Indicating that if we continue this momentum, we should come up and retest these highs, which is our previous 1272 extension. That's going to be 1.33, and then above 1.1 or 1.133, sorry. And then above there, we have 1.201. And that's still going to act really as a breakout wave. If we're able to get past there, then we have the possibility of coming back up to some of these previous levels, right around 1.42, and things like that. Okay, so to give you guys a better visualization, right, we're going to come over here and we're going to repeat the same process and look at our 3 main retracement levels. Okay, and we'll do right in through here. Okay, so it may be looking like a lot of stuff is on the screen right now, but what we're doing is we are measuring this move right here to the downside, right? And we see we came up, and look at where we got rejected. Okay, we got rejected right here at our 50% retracement. So if we're not able to, again, take out these highs, then we could ultimately be heading back down. All right, so that's basically it. Hopefully you learned something new, and this makes sense to you. I know it can seem a little confusing, but it's really just, highlighting key levels, right? You're just connecting lows to highs and looking at, okay, is this a retracement and a continuation, or is this going to be a retracement rejection and we're going to continue heading back down? All right. That's it for today's video. So subscribe to the channel, smash the like button, leave a comment down below on any tickers you want me to analyze. I do viewer requests every week. So if you want to see your ticker in the next video, all you have to do is comment down below.